Welcome to Independent Thinking, the weekly podcast from Chatham House. I'm Bronwen Maddox. This week, we're in Washington, D.C. for the IMF Spring Meetings, giving us the perfect opportunity to talk about a question at the heart of the international financial system. Is the dominance of the US dollar coming to an end? Monday saw the dollar tumble to its lowest level in 3 years after Donald Trump called the Federal Reserve Chairman a major loser and mused about sacking him, but since then he's rode back from those comments. The episode, though, heightened concerns among allies and rivals alike about the stability of US economic leadership and the risks of politicizing global monetary policy. From global trade to central bank reserves, the dollar has long been the cornerstone of the global economy. But as the international order shifts and as countries explore alternatives from the euro, Chinese currency to digital currencies to gold, many are asking whether the world is preparing for life after the dollar. Well, to help unpack this, I'm joined by David Lubin from Chatham House and Isabelle Mateos Lago from BNP Paribas, who are both in Washington, D.C. with me. Let's begin then with the current moment. The dollar may still be dominant, but signs of strain are starting to appear. David, you're a senior research fellow in our global economy and finance program, but in previous life you were head of emerging markets at Citi, the investment bank. So what do you think?
I think it's important to make a distinction between the role of the dollar, the status of the dollar in the international monetary system on the one hand, and the level of the dollar or the exchange rate. These are two, in theory and in practice over the last few decades, these two concepts have been completely separable. In other words, the dollar has gone up, it's gone down, but during those sometimes very big and very prolonged swings in the level of the dollar, the status of the dollar in the international monetary system has been more or less stable. What seems to be driving the debate at the moment, I think, is that some voices within the Trump administration have been trying to kind of fuse those two concepts together. In other words, there's voices coming, I think the vice president is at the top of this list. The chairman of the President's Council for Economic Advisors, Steve Myron, is also among these voices. People who suggest that the reserve currency status of the dollar has left the dollar structurally overvalued. In other words, the reserve currency status of the dollar, the overall international trustworthiness of the dollar, has created so much residual demand for it that it's become so expensive that that overvaluation of the dollar that results from the reserve currency status of the dollar has helped to hollow out US manufacturing. And therefore, if only we found ways to erode the reserve currency status of the dollar, that might lead to a more permanent weakening of the exchange rate. And that in turn could help reduce the trade deficit and attract manufacturing capital back to the United States. So these two concepts, the status and the level of the dollar that are normally distinct, have been pushed together by some voices within the administration.
And you're talking there about voices within the administration, but from the world's perspective, there's a lot about confidence going on, isn't there? First, whether the Trump administration and the US political system are going to do anything about the deficits that the US has, which are adding to its great pile of debt and presenting the world with a question of whether it wants to keep on lending the US great amounts of money at these rates. And then the question about this unpredictability and indeed whether the US might do itself some economic harm by some of its policies, for example, the tariffs. Would you say it's fair to say that that, in the minds of other countries and outside investors, is also what's going on?
Yes, I think that's true in part, although I should emphasize that it's possible to explain the roughly 10% depreciation of the dollar since Donald Trump took office in more or less conventional terms. The market is increasingly aware of the risk of a US recession, and at the same time, inflation expectations in the US have gone up sharply. If you combine the risk of a recession with the risk of more inflation, a weaker currency would naturally be the result. Economists, if I can get nerdy for a minute, economists talk about the real ex ante policy rate. In other words, the central bank's interest rate, in this case, the Fed funds policy rate, minus the expected rate of inflation in a year's time. Now, there's one famous survey of inflation expectations in the United States that's published by the University of Michigan. Inflation expectations, according to the University of Michigan, for a year ahead are now 6.7%. So if you subtract or deflate 6.7% from the current policy rate of the Fed, you get a real ex ante policy rate, in other words, the policy rate minus expected inflation, of something like minus 2.5%. And that's fallen very sharply. And that decline in the real ex ante policy rate of the Federal Reserve would naturally lead to a weaker dollar. So the rise in inflation expectations, together with the risk of a recession, is a perfectly conventional way of explaining why the dollar has weakened, along with expected good news from the European economy and the Japanese economy. The euro and the yen have both strengthened dramatically against the dollar in recent weeks.
So, Isabelle, let me bring you in on this. You're group chief economist at BNP Paribas, but you're also at the IMF before that and later BlackRock for years. What is your take on how much, as David is describing, can be explained for normal reasons and how much is abnormal?
I would agree with David's analysis. I mean, what he described is definitely one of the factors at play, but I don't think it's the only one. Exactly, what part is still difficult to quantify at this stage, but I would point to two things that are definitely abnormal. One is the standard textbook response to the imposition of tariffs by a country. The equilibrating response, if you will, would be for the currency to appreciate. And that's why, in fact, in all the global outlooks that were published at the end of last year, knowing that President Trump intended to raise tariffs, nearly all forecasters expected the dollar to strengthen this year. And the fact that the opposite has been happening in response to the tariffs is highly against conventional wisdom. Let's put it that way.
So, this was an important sign that people were rethinking the status of the dollar.
That's right. The second point is that, in almost every episode of global market volatility or global market pullback in risk in modern history, the safe haven of choice has been US Treasuries. In other words, whenever global markets, and especially stock markets, started falling meaningfully, people would go and buy US Treasuries, and US interest rates as a result would go down. This happened even in 2008, when the US itself was the heart of the global financial crisis. People still went and bought US Treasuries. Not so much this time. In fact, this time, the US Treasury yield has been going up. The US 10-year yield, the 30-year yield have been going up very massively for a market that is usually very stable. And that, to me, is a really serious indication that the US assets are not playing their traditional role of safe haven. And instead, people have been buying bonds, buying Swiss franc, buying Japanese yen, not US treasuries. And that's highly unusual.
Let's just explore for a moment what that tells us about investors, other countries' confidence in the dollar. Why is it not a safe haven this time?
Well, I would point to two things. The first one is, and you've already alluded to it, bonds, especially long duration bonds, are not a store of value or not a safe haven if you're concerned about inflation. And the combination of inflation expectations getting de-anchored, as David already alluded to, the fact that it would be very reasonable to expect the very large tariffs put in place by Donald Trump to generate at least some transitory inflation, and the fact that the president has been actively trying to undermine the independence of the Fed, even to the point of threatening to fire Fed Chair Jerome Powell. I think this has all played an important part in eroding historic trust in US debt as a safe haven. Now, of course, President Trump has walked this back and said he doesn't intend to fire Jerome Powell, but this is one day, and who knows what he will say the next day. So I think that the trust has valid reason to be a bit shaken. The other important element is that a gentleman who is now president of the Council of Economic Advisors and sits in the White House has written a paper, in fact, wrote it in November, where it essentially explains that one of the remedies for resolving this problem of the dollar being too strong and hollowing out US manufacturing would be to charge foreigners for the privilege of holding US treasuries, or potentially force them to convert their holdings into perpetual bonds or 100-year bonds or things that would be regarded as coercion, whichever form they take. And that is obviously highly destabilizing to the concept of a safe haven. Now, this is not official US government policy, but this is effectively a policy paper written by somebody who now sits in the White House. And so that has got to get people thinking.
I should also mention there's I think, an important moment when J.D. Vance was still a senator. In some congressional testimony, he was quizzing Jerome Powell.
Let's just be clear. Jerome Powell, Jay Powell, is the head of the Federal Reserve, and so sets interest rates.
At that time, Senator Vance is saying to the chair of the Federal Reserve that he's talking about his knowledge of Appalachia, the economy of Appalachia, and how the economy of Appalachia got distorted by coal. And he said, coal generated a huge income flow into Appalachia, but that ended up sucking resources away from the rest of the economy. What J.D. Vance was doing there was describing a phenomenon that economists call Dutch disease. It dates from Holland, when in the 1960s, Holland found natural gas. The discovery of natural gas caused the Dutch exchange rate to strengthen, but that strengthening of the exchange rate in response to the commodity discovery ended up eroding the manufacturing base of the Dutch economy. And that's Dutch disease. The idea that the currency appreciation that results from something in the economy ends up having bad effects on the rest of the economy.
I've still got Nigeria on my mind from a few weeks ago, and that is what happened to it when it discovered oil, and that undermined a lot of its agriculture. A small diversion.
That's right. Let me just make the point that J.D. Vance's argument amounts to saying that the reserve currency status of the dollar is a form of Dutch disease. And that, because it's created this sort of structural demand for the dollar across, the international monetary system. And, the argument follows is that we probably therefore need to consider implementing policies that undermine the reserve currency status of the dollar, for example, by imposing capital controls or taxes on capital inflows. And by doing that, you could lead to a more permanently depreciated dollar, which, as I said earlier, would, in their view, be helpful to reduce the trade deficit and attract capital inflows.
So this is an extraordinary point. As you said, there are some in the administration, and you're right to point to him, who are arguing, look, could this really be helpful for their goal at the moment, which is to change the trade balance? But it is something for the US to consider, even all elements of the US administration, to consider throwing away or handing back or weakening this standing of the dollar that you were describing at the beginning. You remember when Liz Truss had her moment and people said, oh, well, she's trying to follow US policies, but without having the dollar, without having that standing of the dollar as the world's reserve currency, and you simply can't do it as a small country.
There are many paradoxes in current US policy, but one of them is that actually they're not saying we don't want to be the reserve currency of the world, or we don't want to be the major currency for payments. In fact, they very much say we want to keep that because it gives us power to impose sanctions. It gives us power to really control the system. So they want to keep all that, but they don't want the minor problem of having a slightly more appreciated currency. So it's really a question of eating your cake and having it, US version.
I find that of all the British exports to the US, one of the most successful at the moment is this idea of cakeism. But David, this goes back to your first point about the difference between, usually the difference between the status of the dollar as the world's reserve currency and the actual level of it at any point. What do you think of what Isabelle's just said, that some people in the administration want the status of the reserve currency, they just don't want the dollar to be high?
Yeah, one of the features of this administration, one of the features of observing the administration over the last few weeks and months, is the multiplicity of views.
94 days, let's be precise.
It's the multiplicity of views, both about the reserve currency status of the dollar and about the level of the dollar. So Scott Bessent, the Treasury Secretary, has often referred to his desire for a strong dollar, which seems to remain committed to a strong dollar policy, at least in the long run. That seems to be inconsistent with some other comments that have come out, particularly this analysis of Stephen Myron and others, that the reserve currency status of the dollar has left it structurally overvalued. So, yeah, there are different views about different issues. One point that I think is interesting is the way in which the dollar's reserve currency status may have changed because of the way Donald Trump is reconfiguring his relationships with the G7. If you go back to the aftermath of Russia's invasion of Ukraine in February 2022, Biden was able to rally around the G7. Every country that prints a reserve currency joined together in sanctioning the Russian central bank. So if you are a country thinking about de-dollarizing because you might have a lousy relationship with the United States and you're worried that the US is going to weaponize its dollar against you, the world that Biden created after the invasion of Ukraine was one in which very few countries would have any incentive to de-dollarize because other countries printing reserve currencies were behaving in the same way as the United States. And so the value of diversifying out of the dollar into the euro or the yen wouldn't get you any geopolitical protection. But now that the G7 unity is much more questionable, there may be some value in diversifying away from the dollar for a country that might be worried about Washington's ability to weaponize the dollar against that country.
Let's go on. Let's just pick up that point and go on specifically to what China might do. We've got this far in this without really mentioning China, and we've had 2 years since before Trump, at least 2 years, of China trying to use the BRICS gathering of countries to explore alternatives to the dollar. It's obviously sitting on big stores of money it lends to the US in dollars, and it is a potential weapon against the US. What do you think that China is trying to calculate in all this, Isabelle?
So first of all, I would say there's something very important what David just said now, and which is also relevant to China's strategy, which is that when you look in history at what have been the dominant reserve currencies, there's always been obviously an economic and financial underpinning, but as well a geopolitical one. And I think the pivot that the Trump administration appears to be making on the geopolitical level is at least as important a driver as what they're doing on the Fed or strictly financial issues in undermining the appeal of the dollar. And so what the Chinese are trying to do with the BRICS is to effectively, it's a political effort. It's a geopolitical effort to say, okay, look, from a geostrategic standpoint, we agree with one another. We might all find ourselves on the wrong side of a dispute with the US and its allies.
How do you mean a common currency?
Well, depending on who the allies are, let's make sure that we are not dependent on the US dollar or the whole US financial infrastructure, payment system, etc. And one of the elements of that would be to create a common currency. But I think, frankly, at this stage, this is so far from having.
It's hard to see that ever becoming a big alternative to the dollar.
Oh, they've floated the idea of coming up with a common currency. I guess presumably because China realized that trying to push the RMB alone as an alternative maybe wouldn't be sufficiently appealing, not least because they apply capital controls, so the RMB is not freely convertible. So it's kind of hard to say, well, I want my currency to be.
At the moment, that is anathema to how they run their country.
Unless they're happy to make their currency convertible and their capital account fully open, etc. But right now they're not. So you can't have both. So they've been talking to the others. But frankly, at the moment, it's more of a diplomatic concept. And when you talk to the central bank governors of these countries or even their finance ministers, they acknowledge that it's not really something that would be viable. But one more thing I would say, though, in this question of the search for an alternative to the dollar, people often point to the fact that, well, the dollar is so big and the others are so small and they're not really viable candidates. But there's no need to replace the dollar with one other currency. There have been multipolar reserve currency systems before for pretty extended periods, and you could just have the dollar come down meaningfully more, the euro play a bigger role, some of the other current reserve currencies play a bigger part, and have a multipolar system, and that could be a viable one.
David, what do you think of that? Could the euro be more important than it is now? And what about gold and all this?
The euro could be more important than it is now if there was common fiscal policy and if there was, this is a difficult issue to get into, if there was a greater sense of the European Union's military relevance.
Right. Do you know for the moment? I'm going to take that as a probably no, but,
Yeah.
but
Fair enough.
You have listed the conditions. Yes.
There's an important point, Bronwen, which is that, as Chairman Mao once said, power grows through the barrel of a gun. You can say that currency power also grows through the barrel of a gun. In other words, historically, it is true, I think, that the top currency globally is printed by the top military power. Currency power is a kind of is a projection or a derivative of national power, and national power is a derivative of military power. So I think these things are worth bearing in mind. And that has some relevance, just picking up on what Isabelle was saying. She's absolutely right. It's completely possible to imagine the euro and other convertible currencies adopting a bigger role. But the fact of the matter is that the rules and norms suggest that the definition of a reserve currency is more or less inseparable from the definition of a convertible currency. That's why, as Isabelle said, the renminbi is not going to make much progress as a reserve currency, because the Chinese authorities will, in our lifetimes, not get rid of China's capital controls.
Just to explain for everyone what is meant by capital controls.
If you're a Chinese citizen, for example, you can buy $50,000 a year, and that's all. And you can buy that only to go on holiday or to send your kids to school or university abroad. In other words, it's for current account transactions. It's not, you can't buy dollars to go and buy an apartment in Vancouver.
And what does that mean for people outside China who might want to put their money in the renminbi?
Well, that's a perfect question, because the very point is that there's very likely to be more Chinese money that would like to go and explore the rest of the world than there is money in the rest of the world that would like to explore China. So if China got rid of its capital controls overnight, the outcome, I think, would be a very sharp depreciation of the renminbi.
Let me just pick up your fascinating point about currency power following military power in the absence of mechanisms like capital controls. We have at the moment this intense rivalry between the US and China, and they are the two outstanding military powers at the moment. Do you think China, in its view, because of its need for capital controls, is, if you like, foregoing that currency power that it could be having? Could you see a world in which money would want to flow into China in that way?
A reserve currency pretty much needs to be a convertible currency. That stunts the growth of the renminbi as a reserve currency. But I want to make 2 points. The first point is that it's perfectly possible to imagine a world, an international monetary system, where reserve currencies have capital controls. We've been there during the Bretton Woods era. Reserve currencies all had capital controls. So it's only true, as a matter of fact, that the current international monetary system has a set of rules and norms that require reserve currencies to be fully convertible. The second point is that if the US does go down this road of eroding the reserve currency status of the dollar by introducing capital controls, then the categorical difference that currently exists between the fully convertible dollar and the not fully convertible renminbi, that categorical difference starts to break down. So in a way, one of the consequences of the US possibly going down this road of trashing the reserve currency status of the dollar in order to weaken it would be to open a path for China to accelerate the growth of the renminbi as an internationally important currency.
That's absolutely fascinating. Yes, go on, Isabelle.
Just to expand on the theme that alternatives may not exist, readily today, but may appear in the next 5 to 10 years. What David was saying about the weaknesses of the euro as a candidate right now, these are all things that the European Union is actively working on, be it the defense autonomy, be it the capital markets union, being the lack of a common fiscal policy. One argument that David didn't mention, but has been an issue historically, has been the lack of enough debt issuance. Well, Germany has just announced it's going to issue an extra 1 trillion euros of debt over the next 10 years, where there's a good probability that we're going to see another round of common euro borrowing issuance. And so all these issues that have up until now slowed down very significantly the growth of the euro as a credible reserve asset. These are being addressed, and they're being addressed with a great urgency since the arrival of Donald Trump, the return of Donald Trump in the White House, and the big pivots that have been executed in recent weeks. So that's another evolution that I think will be happening.
So let me pull this together as we're coming to the end. We have the title of this episode of the podcast, Is the Dollar Dying? And we've gone through some of the reasons why there's been a lot of doubt about this, about worries about inflation following the tariff policies, the president's own undermining of the Federal Reserve Chairman, Jay Powell, whose job it is to tackle inflation and set interest rates, that backtracking on that. We've gone through some of the other big structural reasons for worries to be out there, and we've talked about some of the signals that we've seen in recent weeks about the world's wobbling confidence in the standing of the dollar. But I wanted to ask you both what your answer to this question is: the dollar dying? Because we've just been talking about the development of alternatives. And yet I'm conscious, David, we were at the same dinner that Chatham House was running at the British Embassy last night. And I was conscious how the mood on these questions of the dollar in a very financial crowd was perhaps a bit more optimistic than it might have been a week ago or even 2 weeks ago. Where are we now? Is the dollar dying?
Well, I guess the question should divide into two. Is the dollar dying? Is the dollar dying just because the exchange rate will weaken? Or is the dollar dying because its reserve currency status is at risk? I would say that it now feels like a weaker dollar. In other words, the dollar is dying because the level is depreciating. That seems to be a much stronger consensus than it was. I mean, Isabelle is absolutely right, and I was as guilty as many other economists in thinking that a Trumpian dollar would be a strong dollar because of loose fiscal policy, because of the consequences of the tariffs. And so the fact that we're now in dollar depreciation territory is a shock. And the fact that the Eurozone economy is doing very well, Japan is doing well, China may be delivering stimulus. In other words, the rest of the global economy outside the US may be showing more signs of life than the US economy, and that will tend to weaken the dollar exchange rate. So I think it does feel to me like the dollar may be dying cyclically. Whether it's dying structurally is more difficult to say. And I would say actually that in a way, the voices in the administration that want to trash the reserve currency status of the dollar might go quieter now that the dollar is actually weakening, because the dollar exchange rate is moving in the direction that they would like to see it move in. So it may be that the death of the dollar in terms of the exchange rate, in terms of the level, may help to preserve the status of the dollar, because the voices within the administration who would like to undermine the status of the dollar may go quiet as the dollar continues to weaken.
Really interesting points going back to your first ones. And Isabelle, is the dollar dying? Its status, or what about its level?
No, I don't think the dollar is dying. I would generally agree with David's framing. I think what may be dying is the notion of US exceptionalism, which had been in vogue, especially since the pandemic, with the US economy recovering so much more quickly and strikingly as most others, with the US stock market outperforming all the others, and with generally a sense that US assets were the most desirable to own, not just treasuries, but all forms of US assets, because that's where the growth and the innovation and all the good things were. And I think now people are reconsidering this, but that doesn't mean that the dollar is dead, or even that the role of the dollar in the global system is dead. But I do think, the share of the dollar, even just in reserve systems, has fallen by about 12 percentage points since the turn of the century. We're probably going to see continued slow erosion, even if all goes well, just because of this lesser exceptionalism of US policy. And if US policy is actively undermining the US economy, then that could accelerate. I think the notion that the dollar weakening will be satisfying to those voices in the administration that want that to reindustrialize the country. I mean, maybe they will be happy, but whether that will succeed to reindustrialize the country, I think, is another question entirely. Deindustrialization has happened everywhere, including in China, by the way, and that has happened to countries with strong exchange rates or weak exchange rates. And so that's a completely other question.
Oh, that I completely agree with it.
Well, we then get on to bigger questions of whether the industrial part of the US's economy is dying, and indeed what is happening to the US itself in the world. Those are other things that we'll deal with in other podcasts. I ended a previous podcast saying there were so many questions about the dollar, we were going to do another one, which is this one. But I'm ending this one in saying that it has generated so many other questions about America. We are going to have to pick those up at that point. We're going to have to stop now. Thank you so much for joining us for Independent Thinking from Chatham House. If you enjoyed this episode, please do leave us a review, or even better, send us topics you'd like us to cover. We love hearing your thoughts on that, and they really do influence how we go about it. Producer today was Amanda Nunn. Many thanks to her. I'm Bronwen Maddox. Speak to you next week. Goodbye.